All right, so let's take a quick look now to see what happened in Europe. Well, there are also some losses. The FTSE losing 1.7%, and the CAC and the DAX 2.5% weaker. Do ignore the green arrows there. Let's see what's happening locally. The all-share index 1.1% lower. Industrials losing 0.7%. Financials 1.5% down. The resources index 1.7% weaker. The gold index climbing by 3%. The platinum index 1.5% up. We do apologize for the wrong arrows there. Your gold price at the moment, gold $1,091 an ounce. Platinum is at $845.85 an ounce. And there you go, that Brent crude oil price, $28.54 at the moment, a barrel. The currencies, your rand to the dollar 16.65, 23.92 against the British pound, and to the euro 18 rand 18 cents. Just a quick look there at what the BRICS currencies are doing at the moment. All right, so Herman Smith from NEFG joins me now to take a look at some of the market developments. Herman, thanks for coming in.
My pleasure.
All right, so how about this oil price? I mean, hovering around $28 a barrel. That's affected sentiment, hasn't it?
Yeah, certainly, and I think it's very negative from a global perspective for those energy companies, of course, but it's good for the consumer on a global front, and it should be good for GDP numbers on the global front as well. That puts more money in people's pocket, unless you're living in a third world or emerging market country like ourselves. You've got soft currencies, and that, of course, doesn't help you much when you go to the fueling station to put some diesel or petrol into your car. So, yes, it's a concern. There's an oversupply that's developed over years. The US shale gas has actually developed over time. They did about 2 million barrels a day, I think, 5 years back, and they're doing 12 million now today. So that's, of course, 10 million excess barrels a day. But I think that if you look at the figure, they anything between 1 and 3.5 million barrels a day too much in the world at the moment. So depressed prices, they won't stay that way forever. Commodities do sort themselves out over time. And this will, of course, over a long period of time, lead to higher oil prices going forward. But at the moment, it's just been hammered.
Yeah, and in the meantime, while it sorts itself out, we see people losing jobs. BP announcing that 4,000 jobs worldwide will be cut over the next 2 years.
Yeah, you can imagine these guys normally operate in dollars or euros, etc. Those currencies have been strong. So their revenue has been affected and their bottom line has been affected as well. So cost-cutting exercises on their front. We've been sheltered a bit on Sasol and our companies on the local front because the currency has been so weak. But they of course, had Project Phoenix that they actually fired a lot of people before the oil price came down. So I don't know if they maybe expected it, but they certainly probably have finished the cost-cutting exercises a year or two back.
All right, let's bring it back locally now and look at the very, very nice picture painted here by retailers. And of course, they have reason to paint that good picture. Let's start with Woolworths. I see that the group sales growing by 12.3%. Expected, you think?
Yeah, I think so. They've made inroads over the last few years and certainly have attracted new customers to their stores. They've done a brilliant job from management point of view. I think the value for money that they put on the table for the higher LSM bracket in South Africa is certainly the best that there are. I don't think they got the competition at the moment. So they're certainly growing rapidly. And then, of course, they've done an acquisition in Australia, which would have helped them in currency terms. And if you look at the whole package, you're looking at earnings of between 25 and 36% higher for their first half numbers. They have been stagnating over the last 3-6 months periods of reporting. So this is very interesting, and you would have expected it on earnings front from the Australian business that they acquired. So those are good numbers, and the market took it as good numbers as well.
If you look at the tight environment, you would think otherwise in terms of their performance, but I see Massmart, another retailer, also full year sales rising by 8.4%. That figure there, 84.7 billion rand.
Yeah, it's amazing. I think it's a bit softer than what people expected, and it's not cheap as well at the moment. So it's still a 21 or 22 PE multiple. It is struggling. If you strip out like-for-like growth, it comes down to, I think, 6.7, and then inflation of 3. So they've actually not grown that much. It's been a difficult road for them after Walmart actually acquired them, and I think Walmart probably paid too much for the asset those days, and we were out of retailers at that stage. But you're seeing some of these retailers getting ridiculous prices as well at the moment. But it might be too early yet because of the currencies falling and expectations of more interest rate hikes coming forward. You're certainly thinking that the consumer will be under strain for the next year or two.
Yeah. All right, we're going to have to leave it there. Herman Smith from NEFG. Thanks indeed for coming in.
My pleasure.